So we had a good question that came up here recently. What's better, term life insurance, universal life, or whole life? Seems like a pretty straightforward question, right? Well, it's not as simple as you might think, especially if you're in your 50s. So today we're going to talk about how to determine which one you need. If you need any of them at all, we'll break it all down with Anthony next. Welcome in. This is All Things Retirement with Anthony Aulffo, founder of the Cardinal Wealth Group. As always, the goals are to educate and empower. And this episode is going to do that as well as we talk about life insurance. Maybe not the most exciting topic to go through, Anthony. I mean, all right, nobody wants to think about our own mortality, but this is something you work with your clients on. And again, it's an important conversation to have, right?
Yeah, one of those things that you hope you don't need, but certainly plays an immense role raising a family like myself, and for many even retirees that they need it for other types of reasons. So excited to go over that with you guys today.
Yeah, and we're going to get your honest opinion on each of these products and kind of help people better understand how they're used. And I know you work at the Cardinal Wealth Group with clients in their 50s, right, approaching retirement or in retirement. So when a client comes in that age range and they still have a term coverage, what's the first question you ask them about it?
Yeah, I mean, part of the financial planning process is to get a better idea of what they're trying to accomplish. And a lot of folks, will even say, I got this life insurance thing. I don't know if I still need it or not. And we'll get in a sense of, what is it? Is it term or permanent? How much is it for? When's it running out? And why did you purchase it previously? Some of it's obvious, kids were growing up. But now the kids are grown or about to be, mortgage is nearly paid off. Do we still need it? So typically what we'll do is we'll run different scenarios. They're 50 years old. If something happened to you today, killing off one of the members, not the most exciting thing to talk about, but that's obviously what the purposes of the life insurance benefits for. And then we'll test other times in the future, maybe age 60 or at retirement or at age 72. And some of those things change, right? I mean, while you're working, you lose an income. When you get into retirement, you could lose a Social Security. So there are some events that happen that could cause gaps in your plan where it still can make sense to carry life insurance into retirement.
Well, let's talk about some of the different types of coverage then, because I think that's what people really want to know. Hey, which one's actually better? So let's start with whole life. I know it does get a lot of praise, but it also does get a fair bit of criticism as well. What's your honest opinion on whole life?
Yeah, I mean, with all of these, I really just think it depends on your expectation, how much you want to spend from a cost standpoint, what you're trying to fix, what's the situation, right? So with whole life, it's not going to be necessarily the cheapest option, but it's going to be one of those permanent solutions that, assuming you make your premium payments, you're not going to outlive it. It has benefits. If you're looking for the cheapest option, like somebody's just starting a family and out of school, or recently out of school, has school debt, is trying to save for retirement, that term is going to probably be the easiest way for somebody, right? To just get some coverage to protect the family, keep costs low, and help them still, put money in other places. Whereas the whole life, I think, is going to be a little bit more helpful for somebody who has a little bit higher of a budget to spend on this. Maybe is trying to help with estate planning for tax purposes, for inheritance purposes, to offset the taxes for required minimum distribution, or they own a closely held business that they want to have a buy-sell agreement between two partners. I think a lot of times those are some of the areas where I've seen it used a lot. Funding trust, passing money on in a tax efficient manner can really work well. I think a lot of the shortcomings or the negative news maybe comes to that what feels like a predatory type of selling from maybe an insurance agent or an advisor's maybe not thinking more about their wallet than the client, and it's showing them these illustrations of the whole life where it can make more money over time, greater than the market on a tax adjusted basis. And I think that's where sometimes we have to get cautious versus, saying that saving it here versus saving into the stock market, you'll do a lot better. I think that's where it kind of can get a little gray at times for people, and or they get a bad taste in their mouth that it didn't perform as they expected it to.
Okay, good breakdown of whole life. What about universal life? I know, one of the key things that people talk about is the flexibility of it, right? Is that a feature you think for universal life, or is that more of a trap?
If it's designed correctly, it's not a trap. The problem is that, like, if you go back 20 years ago when interest rates were much higher, maybe even further, they sold a lot of these policies with an assumption that your interest, it's based off of the interest rate that you're getting here, that you're going to get 9% interest rate. And obviously, if you fast forward to today, interest rates are like, say, 4%. Well, if you designed the policy on assuming you're going to get a 9% interest and you only get 4, you're going to have some problems down the road. And we've seen this happen a lot. And not to say that an advisor was going to be able to forecast interest rates over a 20-year period of time, but I think if you're going to make this a policy for somebody that's going to be flexible, not a trap, you're going to set lower interest rate requirements or returns in that policy. So you're not going to walk into this 20 years later and either find out that you're going to have to make significantly more contributions for the policy not to run out or lapse on you. So I would be, if I was going to set something like this up, I would be looking at it from, make it have to have a 2% rate of return and set the target based off of that. And then you get started, and 10, 15 years later, if the performance happens to be a lot better, you run what's called an in-force analysis. You can see, are you above or below kind of the expectation of that policy? And then you can decide, how much flexibility is in there to make, premiums that are maybe less if you wanted to kind of reduce the premium amount. The other issue I would say from a flexibility standpoint, whereas a whole life will typically last to age 100 or age 120, believe it or not, these universal life are generally set up to be guaranteed to a certain age. Like 85 is kind of like this basic model, if you will. So you just got to be really careful, like understanding like what age do you want to guarantee this to? So if you're going to want to guarantee it out to 90, 95, somewhere north of 85, out to age 100, so you don't have the chance of outliving it, that's going to add usually additional premium that's required to guarantee it out to a certain age. And you're going to have to look at different carriers, because some carriers will allow you to get out that far and others will not. So it can be a little tricky sometimes if you're not working with the right person on that and know what to look for.
All right, good stuff. Let's go to permanent life then. I know there's an argument for wealth building when it comes to permanent life insurance. Where do you stand on it?
No, I don't think that's where I would start. I would probably start from regular old investing if I was going to be wealth building. If I'm somebody who's just out of school, started a family, has a job, I'd want to be funding my 401k or whatever retirement plan as much as I can. And if I'm somebody who's already has wealth, has lots of excess cash flow after I've maxed out my retirement savings, putting money away in other after-tax investment accounts, Roths and stuff like that, then I would say, we're looking at other avenues, ways to put away money, longer term planning, because you might need insurance beyond that. Then I would maybe start to consider that as an avenue. You have, people, again, some of the things we talked about, estate planning, a pension max strategy, taking the single life over the joint survivor. People who have a pension would eventually understand that, and life insurance can play a role in it. A closely held business, a buy-sell agreement. Those are going to be some of the reasons why I would use the permanent life. I wouldn't necessarily use it as a wealth building starting point. But if you had some free excess cash flow that it's forcing you to save more, you could surrender it down the road. So those are some added values and times when you can consider it if you don't have that estate or business plan where it's kind of required.
Okay. Well, maybe let's just zoom out for a minute as we kind of close out this conversation on life insurance and just maybe ask kind of the bigger picture question here for someone in their 50s that you're working with. Do they even still need life insurance at all?
Yeah, it kind of goes back to how we started this. We run that test for all our clients to basically see, if something happened to you today, is your surviving spouse going to have enough? And oftentimes, there is still a need for life insurance. It doesn't mean that they're going to keep it, or if they don't have any, they're going to run out and buy it. We've had plenty of conversations where people, don't want to insure that risk and are just going to kind of hope that, they outlive that risk. And, but yeah, I mean, people in retirement need life insurance, and it serves a purpose. It's important. And even when the financial plan says you're okay, you can still have more, right? Just because the financial plan says you should be all right, Mr. and Mrs. Smith, or you should only have to reduce your budget by 10%, doesn't look like you really need life insurance. You can just say, like, it's okay to have some more for extra protection just in case. And there are life insurance policies that have other features and benefits, like long-term care, assisted living help, where you can get access to the life insurance amount to use for an assisted living, nursing type event, for an extended health event. And so I would say, life insurance does have a purpose.
Well, it's a great question. And again, one, hopefully that we've kind of answered a little bit in the purposes of each one. But again, it's going to depend on what your goals are. What problems are you trying to solve? That's kind of what the assessment does that Anthony and the team at Cardinal Wealth Group put you through at the beginning, right? So free assessment is the beginning of your Cardinal success journey. And it's a chance to kind of evaluate things like insurance and your overall plan and get a better idea of where you stand financially, and helps begin solving some of the problems that you have moving forward. Go to cardinalwg.com to log on and begin that Cardinal success journey there. If you have any questions, everything is in the show description for you. Make it easy to find. But we appreciate you watching. And please, if you have questions for us, drop a comment below. We'll try to answer maybe on a future episode. So, Anthony, thanks for the breakdown of life insurance. I know it's not something we like to think about, but it's important that we understand it.
Yep. Thanks, Ben. Happy to help.
Information provided is for informational purposes only and does not constitute tax, investment, or legal advice. Please consult a qualified professional before taking any action.